You put your money in the bank, you feel safe, responsible, organized, like, yeah, I'm doing things right. But here's the part nobody really thinks about. Your money isn't just sitting there, it's moving, it's being used, it's making money, just not for you. Banks take your deposits and actively use them every single day. So the real question is, what actually happens to your money after you deposit it? Let's break it down simply. When you deposit money into a bank, something important changes. That money is not sitting in a vault with your name on it. Instead, the bank now owes you that amount. You don't hold the money anymore. You hold a claim to it, meaning you can withdraw it, but the bank can use it. So what? Your balance is a promise, not a physical pile of cash. Okay. Now let's see what they do with it. Banks are not storage companies. They are money businesses. Their job is simple. Take money from people who have it and give it to people who need it. That's how they operate. You deposit money, right arrow bank collects it. Someone else borrows money, right arrow bank lends it. That's the core loop. So what? Banks move money. They don't just hold it. The main way banks use your money is through loans. They lend money to individuals, credit cards, personal loans, businesses, home buyers, mortgages. That borrowed money gets used immediately. People spend it, invest it, or use it to build something. Then they pay it back over time, with interest. So what? Your deposit becomes someone else's loan. Here's where it gets interesting. Banks don't keep all your money in cash. They keep a portion and lend the rest. This is called fractional reserve banking. Simple version. You deposit money, right arrow bank keeps some, right arrow lends the majority. That loan gets spent, right arrow ends up in another bank, gets lent again. So the same money keeps circulating. So what? One deposit can support multiple layers of lending. Banks don't make money from holding your cash. They make money from interest. Here's the key idea. They pay you a very small return or nothing. They charge borrowers a higher rate. That difference equals profit. Example, no exact numbers needed. You earn almost nothing on your balance. Borrowers pay significantly more to access money. So what? Banks earn from the gap between saving and borrowing. Banks want your money inside their system, not for safekeeping, for fuel. More deposits equals more lending power equals more profit potential. That's why they make it easy. Labs, cards, transfers, low friction. They want your money to stay inside. So what? Deposits are the raw material of the banking business. Now the obvious question. What if everyone wants their money at once? That's called a bank run. And yes, banks can't instantly return all deposits at the same time, because much of the money is out in loans. That's why banking systems rely on regulations, liquidity rules, trust. So what? The system works because people don't all withdraw at once. Even knowing all this, people still use banks because they solve real problems. Safe storage better than cash at home. Easy payments, fast transfers, financial access. Banks make money from you, but they also provide value. So what? Banks are useful, but they're still businesses. Here's the deal you're making. You give up control of your money. In exchange for convenience and access, you don't manage physical cash. You don't worry about security. You can move money instantly. But your money gets used in the system. So what? Convenience always comes with a trade-off. You don't need to avoid banks. That's not realistic. But you should use them correctly. Basic approach. Use banks for storing and moving money. Don't expect growth from your balance. Keep only what you need for short-term use. Because banks are not designed to grow your money. They're designed to use it. So what? Use banks for function, not wealth building. Avoid these mistakes. Thinking your money is just sitting there. Leaving large amounts idle forever. Ignoring how the system works. Panicking about the system. Understanding fear, always, because it's invisible. You don't see loans being created. You don't see money moving behind the scenes. You just deposit, spend, repeat. So what? The system feels simple because the complexity is hidden. Banks sit in the middle of money flow. They connect people with money to people who need money. And they take a cut in between. That's the business. Simple. Your bank balance is a claim, not stored cash. Banks use deposits to create loans. They keep a fraction and lend the rest. Profit comes from interest differences. Deposits power the system. Trust keeps it stable. Banks provide convenience and access. You trade control for ease. Banks are not for growing wealth. Banks aren't trying to trick you, but they're not working for you either. They're working for profit, and once you understand that, you stop being passive in the system. If this changed how you see your bank account, hit like, and next time you check your balance, remember it's probably already being used.